Gold finds buying interest at the 1200 level. Over the holiday weekend, gold tested and held support at the psychological $1,200 number. Joining us today is Kitco's Global Trading Director, Peter Hug. Peter, thanks so much for joining us.
It's nice to be here again.
So, Pete, as you indicated in your morning commentary, the not-so-good news for gold started after Fed Chair Janet Yellen indicated that recent economic data should support a rate hike this summer. Will gold continue to struggle until we get further notice here, Pete?
I think it has. Gold hit a high of 1,300 and touched 1,200 over the holiday weekend. Most of the selling over the past week or so has been directly attributable, in my opinion, to the hawkish comments out of the Fed. And then Yellen happened to opine as well last week that she thought that economic data might be strong enough to warrant an increase sometime in the summer. And I found that interesting that she said sometime in the summer, because I still believe June is off the table. I don't think they'll move ahead of the Brexit. And if they move in July, and I think they'd be silly to do it, but if they moved again in July, it'll be a one-and-done affair, because I don't see them moving at all in the fall ahead of the election. So if for some reason they feel they need to move a quarter point, I think it'll come in July, but I think it'll set up similar to what it did in December, which if they raise, it'll be a buy, not a sell for the precious metals.
So, Pete, short term here, we have a shorter trading week, but one loaded with some big data points here, and obviously the big number on everyone's radar is Friday's employment data. Yep. So do these numbers become more important now?
They do. And I mean, if you looked at the numbers this morning, you had, the consumer numbers that came out were a bit more positive than expected. And there was a bit of softness immediately after those numbers were released. And then you had the Chicago Purchasing Managers Index come out, and it was under 50. Which was worse than expected, and then gold caught a bid and moved up from the 1209 level to where it sits now, right at there's minor resistance here at the 1217, 1219 level. So I think this is extremely sensitive to data, and strong data will encourage people to think the Fed may go a quarter, and weak data may encourage the people to think that the Fed will hold off. And again, I don't think June's on the table, and if July's on the table, it'll be a one-and-done affair. And I think the macro picture still suggests that at these levels here, gold is a buy, not a sell.
Something that also stood out for me was the latest CFTC data, which showed money managers exiting their long positions at the fastest pace in the report's 10-year history. Is this something that concerns you, Pete?
It doesn't, because they were late to the party. Money managers, if you look, all you have to do is, except for maybe one or two examples, if you look at general money managers and you look at their returns for 2016 in the equity market, most of them are dismal. Sometimes it's difficult for me to believe that they collect fees for some of the performances that they put in. And these money managers didn't jump on this market in December when gold was trading at 1,060. They jumped into this market at 1,220 and higher. And the fact that they're now getting out at 1,200 indicates to me they're late to the party. They were late to the party, and they're probably late to the exit. So I don't give them a lot of credibility.
All right, Peter. So just to wrap, gold had a good day here this Tuesday, up about $20, but it's still at a 3.5-month low. So a key level for you right now?
Well, 1,200 is going to be a key level, and maybe 1,180 comes into play, possibly. But I think if you look at the macro picture, Europe is still having severe difficulties in fighting deflation. Japan's negative interest rate policy is not working for them. China is at best wobbly from an economic perspective, and the U.S. market, the data isn't consistent. You get a little bit of good data, then a little bit of bad data. And I think GDP second quarter is going to be better than the 0.8 that we posted first quarter. But I don't think it'll be much above 1.5. And in that scenario, it's difficult for me to be bullish the stock market. And in that context, I think you need to be, to some extent, exposed to the gold market.
All right, Peter. Thanks so much, and have a great week.
Thank you.
And thanks for watching. We'll see you tomorrow.